If you are new into crypto, start here. They lied about crypto. They told you it's a scam, that it's only for hackers, gamblers, or people chasing a get rich quick scheme. They have never told you that people like me have been living off crypto for years, that I've turned 4-figure trades into 6-figure wins, that I've built a portfolio across Bitcoin, Ethereum, and early stage projects and taken profits in every bull run, that I've traded through crashes, survived bear markets, and still walked away in profit, that I've showed over 5,000 people all across the world how to make a better living through crypto. Not because I'm lucky or I have some secret insider group. It's because I understand the game. They never teach you the real rules of crypto. So if you are new, this is where you start. No hype, no fake promises, just the essential you need before you put a single dollar into the crypto market. Now, before we start to speak about how to get into the markets and how to make profitable trades and investments into crypto market, we need to actually speak about what is crypto actually, Bitcoin, Ethereum, and all of these coins. Now, the easiest way for me to explain, because you don't need to be a pro in blockchain and understanding the technology to make money with it. It's the same with energy and with light. We don't know really how it works. We don't know where energy comes from, but we use it every day. We just flip the switch and it's light. We don't think about it. And that's the same with crypto. But still, you should actually know some of the basics. The most important thing you need to understand about the financial system is that every 100 years or so, maybe less, maybe a little bit more, the monetary system changes. We went from trading sticks and stones to, let's say, precious metals, right? To actually starting to have our first coins that are out of precious metals, then going into worthless cash, killing the gold standard to where we just have plastic and paper money and we give it value, right? So what we as humans perceive as value is actually what is going to be valuable as long as enough people trust in it. And that was at the very beginning the difficulty with crypto. No one really trusted in Bitcoin as its first appearance in 2009, 2010, that it's actually going to be a valuable currency that you can exchange physical or goods or services for Bitcoin, and it's going to hold its value or increase. So later on you can sell it and make and get real money out of it, right? So crypto at the end of the day is what we believe it to be. So far we believe in Bitcoin as being one of the most valuable assets on this planet Earth. And the reason for that and the underlying support for this theory is that institutionals are buying Bitcoin like they have never seen anything else in their life to buy at these prices. Nowadays, we don't only value crypto, or especially Bitcoin, as a means of exchange, as an asset, as a value. It's kind of like a digital gold. It's so rare because it's limited at 21 million, and there's even fewer of the ones that are really in circulations because many Bitcoins are lost. Many Bitcoins have died out because the users or the holders of this very Bitcoin died and it's just on the chain, right? So there's very few Bitcoins that are actually left. It's actually finite, not infinite, like our money. So when something is finite, it means there's a certain amount and there's never going to be more than that. And that obviously pushes demand a lot because supply is limited. And therefore this system, Bitcoin, can work very well as a monetary one, and that's why we're using it. Now, crypto has a lot of coins. There's a lot of different projects that have different values, but the ones that people trust and know the most are Bitcoin, Ethereum, XRP, Solana, and many, many more in the top 10 list that actually people know about. So people go more about what they know and trust and what has already been in the market for many, many, many years than, let's say, just new projects, because new projects and new promises come up every day. You can find them like sand on the sea, right? So it's not actually about how much value can a cryptocurrency or a coin really provide. It's about if people believe in it and see it as being valuable. So that's what's crypto about. Crypto is very special because crypto runs on the blockchain. Imagine blocks, one block created after another block that stores the information of transaction, the fees, where the transaction did go, and all of the valuable information of monetary exchange, which we also have in the real world, but we cannot see it. We cannot see where our governments are sending money to. We cannot see anything, but who can see it is the government itself or the bank, the institutions. So crypto most likely, not in every case, is decentralized. It is more anonymous, right? Which gives a lot of privacy to users, even though it's paradox to say that, because at the end of the day, everything is stored on the blockchain and no information can ever be deleted or erased. Therefore, there's a lot of transparency that will forever stay. But that is what makes crypto special. It's a block created after another block, and there's different ways on how to create these blocks. but they store the valuable information and they cannot be erased. Transactions can be erased, papers can be changed, figures can be changed, but if there's an self-regulated system that keeps information, and the information once created can never be changed and touched, it's very trustworthy. That's why crypto is, in my opinion, more transparent and trustworthy than any other system. On top of that, and I guess that's the main reason, and we're gonna finish with this one, is that it's insanely fast, it is cheap, and it doesn't know borders. When we interact with money, different currencies, let's say for example, I want to send Japanese yen over to US, I need to first change it into US dollar, I'm going to have a fee for that, then I have to transact it, it's going to take some time. Even if I send a currency, a foreign currency to another bank account, they need to, and sometimes even manually adjust it, put it into the system, and then it will be credited into your bank account. That's a so-called SWIFT system, right, for cross-border payments. Now, crypto does no borders. Crypto knows one Bitcoin sent to another address is one Bitcoin, that's gonna be the fee. So it's insanely fast, well, lightning fast if you talk about Solana, right? It's very cheap in fees, and at the end of the day, it's very easy to store. That's why it's more convenient and more safe. It's safer for me to store Bitcoin, Ethereum, XRP, Solanas than, let's say, gold. Equivalent of, let's say, $1 million in gold. Having this at home can be very risky. So now you need to go somewhere else, trust a bank, trust a deposit, leave it there. And that's what makes crypto insanely interesting. Is mainly these 3 points. Obviously, there's many more, but for the basics, that's what it is. Now, the price of crypto that we actually gonna speak about more in trading and investing, and that's what we need, is price fluctuation. Price going up and down comes from supply and demand. Means how many coins are there, how much demand, how many people want it, and what are they willing to pay for it. And these moves cause a lot of volatility, and this volatility is actually what exactly we profit from. Now, another big pro for crypto is financial sovereignty, because you are the one that controls your money. You don't need to trust a third party, especially if you don't store your crypto on an exchange like Binance, but you actually keep it in a private wallet or even in a physical wallet. You are sovereign. This is your money. Only you can touch it. Only you have the code to it. And as long as you don't give the code, the key, or the password to anyone, no one can touch it. And that's something we have never seen, especially in my times of living, and let's say even my parents and my grandparents, right? They were basically victims to the whole system because they control their money. If the bank wants to shut down your account, they can shut it down. If you are of a different opinion, let's say Canada example with the truckers that actually went on the streets fighting for more pay, their bank accounts got closed. So there's no sovereignty, but crypto gives us that. So as a crypto maximalist or someone that believes in crypto and loves crypto, that is one of the main points. It gives you control over your own money and therefore your freedom, your finance, and your future. Now, the very first step to actually get into crypto, after now knowing why crypto is important and more or less knowing how it works, it is important that you need an exchange account. So that's the very first step. An exchange account can be opened in crypto exchanges such as Binance, Coinbase, Maxi, Bitfinex. There's many different exchanges, and these exchanges actually work like banks. Now, we were just talking about sovereignty and you don't want to do this in cooperation with these banks, but when starting off and you want to deposit fiat money, fiat currencies as euro, US dollar, whatever currency you're using to actually buy crypto, you will need to have an exchange, right? Now, these exchanges enable you, like in a bank account, to purchase things. So you put money into it, for example, euro or dollar, and you can start to buy Bitcoin, you can start to buy Ethereum, you can to start buy these cryptocurrencies. Now, for an exchange account, I, for example, love to use Binance or Bitfinex. That's where you can actually put money and wire money into, you can use your credit card, and you can buy crypto. There's also decentralized options on DEXs where you can buy crypto, but as soon as you use your credit card or your bank account anyways, it's not decentralized anymore because you're using a centralized system to buy decentralized assets. Now, the thing I would recommend you, maybe not in the beginning, but later on, if you really want to build up a crypto portfolio, you really want to be sovereign in your money, is use the crypto that you bought on Binance and send it to exchanges or wallets like cold wallets or Trust Wallet that are decentralized where no one has access to it, because Binance accounts can still be closed down. If you somehow end up in a problem with the government, you end up in a case, right? They can still shut down all your accounts, including Binance where you hold your crypto, and they can seize it. So I would not recommend you to keep money on Binance only if you want to trade, but there's also decentralized trading platforms such as Hyperliquid, where at the end of the day, you have the opportunity to send your crypto to and then decentralized trade. means you have an account that is decentralized where you can open trades, you can use Phantom Wallet, you can use MetaMask. All of these are decentralized platforms, as long as you don't connect them with any extensions. Now, the most important thing is once you start in crypto, you will be bombarded with different opportunities on how to make more money with your crypto. And all of that sounds obviously very interesting because you think you are smart, you're depositing money into your exchange, you're buying Bitcoin for $10,000. And now people will start to come at you with ideas on how they will help you to make more out of this $10,000. Now, the biggest advice I can give you, and I can give you that from being a leader of one of the largest trading communities in crypto and trading in general on this planet Earth, is that most people get scammed because they believe the bullshit that it's so easy to make more money with your money by only one simple rule. You can avoid it. And the one simple rule is never ever, and I'm going to repeat again, never ever send your crypto anywhere than your own wallet. Never do it. It doesn't matter. There is many opportunities on how you can multiply your crypto, how you can let crypto trade for you or find someone that trades for you where you don't need to send your money to any other wallet. Because as of in a bank account, if you send your money to someone, it's already gone. Now you have to get it back. Even if it's legit, I still need to request with the investor, with the trader, to send back my money. And I never want to do this. So just remember this one thing. And if this is the only thing you take from this video, you probably already saved yourself thousands of dollars. Never ever send your crypto somewhere. There's opportunities, again, on how to trade, on how to multiply your money by keeping your money in your account via API connection or whatsoever. But the biggest and the best thing you can do, besides learning trading and investing as we do it in our community, and we teach that, if you want to do that, you're just one message away on Instagram of finding out how I can help you with that, is just buying crypto, leaving it there, and let it yield your percentages by increasing of price. That's most of the times going to make you more money than trying to trade it, than trying to swap it all the time and buying these small shit coins where you think, hey, I'm going to buy $10,000 of BTC and I'm going to put 5,000 of that into a shit coin and it's going to make a 10x and then I'm going to buy more BTC. It's not going to work as long as you're not an educated trader and investor, and this skill set takes years to obtain. So don't think you're smarter than the market, because you're not. Now, something you can do, which is very easy, which every beginner should do, is something called dollar cost average, or DCA, right? DCA means you're basically on a weekly, monthly basis, whatever your time frame is. For this example, we're going to use every Friday. Let's say you get paid once a week on Fridays. Let's say out of the $1,000 you get paid in your job, you want to dedicate $100 every week to buy crypto. Then you are using the dollar cost averaging effect. That means on a time frame, let's say a couple of years, okay, let's be more specific, let's say over a time frame or a course of 1 year, if you buy crypto every Friday, right, you have multiple entries in the market where you're gonna have different prices. DCA and dollar cost averaging is very positive for us because over the long run, you're gonna get better prices than most of the times just buying at one time. So let's say instead of waiting 1 year, accumulating the $100 every week, and then going into the market at one price with a big portion of the money of all of it, you're getting it for a certain price. Now, the idea of dollar cost averaging is using that money, either splitting it if you have a lot of money already, splitting it into different time frames and buying at different prices. So you're gonna have an average, and this average most of the times lies below the one-time entry that you would take. So basically you're getting the crypto, the asset that you wanna buy, because you can use the DCA for every asset on this planet Earth, right? You're getting it for an average of a better price than if you put everything in one time. So to be specific here, if you want to invest money and see it as a fund that you're paying into, every week, every month, whatever your time frame is, just buy it. It doesn't matter at which price. Don't try to analyze the price, because again, if you don't know how to trading, invest, you're not gonna have the upside, you're not gonna have an edge. Okay, so just buy on a certain time, a certain amount of money, and don't look at the price, and you're gonna profit from the dollar cost averaging effect. And on top of that, you're gonna have an increase of percentage of price going up, for example. So it doesn't matter if price goes down or up, you just basically buy, and you're gonna make better profits with that in general than just putting everything at one time. Now, the second most important thing when getting into crypto and actually participating in the market is the so-called risk management. And risk management is the single most important thing you need to understand. Risk management, especially when it comes now to trading, is how much of the total capital are you dedicating into any position at given time. So let's say, for example, you have $1,000. That's all you have. You fund your account with $1,000 and now you're ready to trade. You're ready to say, I'm gonna buy Bitcoin. If it's spot or if it's leveraged, it doesn't matter. You just say, I'm going to use a certain specific amount of my money to get into this trade, buy Bitcoin for 3-4 days, make 5% and get out of it. Now, my biggest advice for you is that you should never, ever go over 3% in total risk. That's already high risk. Most traders, including myself in my asset management company or my personal trading, I use 1% strict risk management. Crypto is the only where I use 3%. Okay, so for Forex and everything else, Forex is currency, market trading, I use 1%, max 30% risk at given time. So never ever exceed 3%. It doesn't matter what you think. If it's the perfect call, if your best friend that has been a trader for 10 years tells you buy now, it's very low, never ever trade with more than 3% of the total account. So if you have $100 and you're gonna use 3%, then never ever go in with more than $3 into this trade. And that's called risk management. And risk management is gonna save you from complete ruin of your money, because if you use 100% of the risk in one trade, you lose the trade, you lost all of your money. So what you wanna do is you wanna diversify your money into different parts, in 3% parts, so you have a higher upside of winning, because trading means you're going to lose trades and you're going to win trades. And if you lose trades and your percentage of how much you use per trade is too high, you are limited in your capital. For example, if you use 10% risk per trade, that means you have 10 shots. If the 10 bullets don't hit, you've missed and you don't have any bullets left, and the enemy comes running at you and will destroy you. If you now, for example, instead of 10% use 5%, you have 20 shots. So you're increasing your percentage of winning by 50% just by lowering your risk management by half, obviously. So now you have 20 shots. If you use 1% risk management and you have 100% of capital, now you have 100 bullets. Do you think you're gonna hit the target more often with 100 bullets or with 10 bullets? It's very easy to understand. The more times we can roll the dice, the higher the chance of hitting a 6, right? That's the same thing in everything in life. It's all about risk management. It's all about you perceiving the market in the right way, using the right risk, and the perception of the market is what you're going to learn in trading and investing. If you want to do that. If not, you just keep it very simple by buying assets, using DCA as we said, using good risk management, because you want the odds to be on your side and you want to increase the odds by having more bullets to shoot at your target. Now, a big mistake, and I also did that in my beginnings, is you are buying too many assets. So when you start to invest into crypto, you start with the small coins and small investments. Let's say, for example, you think, look, I don't have a lot of money, so I need to start with meme coins. I need to start with small coins because I need more percentages. I would not advise you to do that. I would start with a portfolio that includes major cryptocurrencies, and that's no financial advice, but I would include Bitcoin, Ethereum, XRP, Solana, CHAINLINK, XLM, and there's more. There's a certain specific list that I will put below this video, which are the coins that I'm buying. If you want to, you can do some research and look for Grayscale. Grayscale is one of the biggest cryptocurrency funds, and you can check out what kind of cryptos they're buying. You can just follow them, follow the big guys. It's the easiest thing you can do. Don't try to be smart and outperform anyone, because you won't. And when you do that, you're basically setting yourself up for more success than starting to buy 50 coins, putting $5 here, $10 here. It's just gonna mess up your whole portfolio. You're gonna be completely confused. And even I, with a lot of money and investing into many different assets, I need Excel sheets over Excel sheets to track where I've invested. And once a year, I rebalance my portfolios, I simplify my portfolio, I put all of my money together again, so I have more liquidity to put in bigger plays in better cryptocurrencies than spreading my money all over the market and everywhere, having $10 here, $100 there, $10,000 here, $2,000 here. You're just gonna overwhelm yourself. And you don't want to do that, because if you overwhelm yourself, you're gonna miss entries, you're gonna miss exits. Cryptocurrencies that you have forgotten about on this exchange are gonna pump 100%, and then you forgot about it just because you have too many assets. So don't focus on 50 different coins, and you don't need to focus on 50 coins to succeed. You need to focus on, let's say, 5 to maximum 10, even 3 can be good enough for your goal long term. Now, there's 3 main stages in crypto that we need to speak about, even though we need to see how it develops in the future, because I kind of don't believe in the 3 cycles anymore. And you might have heard, if you talk about crypto, about the bull run and the bear run. The market, especially prior to last bull run, 2020, 22, and this, let's say C19 run, right, was always in 3 stages. It was the accumulation phase where people start to invest. Then the bull run came. We had very strong outbreaks where everything just pumped. Everything made 50, 100, 200%, and then everything dropped and went into a slower phase, which is the bear market. The bear market was basically a market that doesn't move, nothing is happening, and then it starts with an accumulation phase again. People are getting in, you start to slightly see markets going up, and then you have a breakout, which is the bull run again, right? Now, I don't believe in these stages anymore because markets are too institutionalized right now. There's too many players inside, and I don't think the market will go dormant for years anymore, but maybe for weeks or months, and that's a normal market, right? So you need to be aware of these stages. There's certain times when you want to get in and when you want to get out. But again, I don't believe that the markets are like that anymore. They're a little bit more complicated. Back in the times, crypto was basically free money. It was insanely easy. You needed a time frame. You know when to invest and when to get out, and that's it. You need to be a little bit disciplined and you have made a lot of money. But markets have changed, the structure have changed. We have institutions buying up the whole crypto market, especially assets like Bitcoin. So it became more complicated. So what you need to understand, there are stages in every investment. There are stages where the markets go slower. There are stages where the markets go up, and then there are stages where the markets go down. Now you want to ideally find yourself investing into the accumulation phase. That is the phase after a big drop you want to get in, right? Just remember that. After something comes down, it will go up, and everything that goes up will come down again, even though it doesn't seem like it. It's always like that. So you want to position yourself after a big correction that is at least more than 20 to 30%, up to 50% in given cryptocurrencies, depending on which cryptocurrencies. Higher market caps like Bitcoin, Ethereum, and so on, they have corrections in between 5 and 15 to 20%. After these, you want to get in. You don't need to be a bright, smart trader using technical analysis and fundamental analysis to see this in the market. But once something corrects 10, 15, 20%, maybe you should think about getting in. Don't get in when it pumps. That is the biggest rule, and that's what you need to understand about the stages. Most traders and investors get wrecked because they need a confirmation from the market. Means they get in when the market already is shooting up and they're missing most of the profits, and now they got a very high entry, and therefore what goes up comes down again. It's a normal cycle, and then they start losing money, and now they have to manage positions that are highly in minus, sometimes 40%, 50%. So my opinion is either you have the DCA strategy where you just get in whenever, or when you try to be a little bit more nuanced, then you want to get in after bigger corrections. So what you need for that is opening the chart, looking if there's a big correction. As you can see, a big correction over there in this chart, which is SPX 6900, a big meme coin that I just got in after a very big drop. Don't follow the masses, do the direct opposite. There's a saying, which is the most important one, from Warren Buffett: when there is happiness on the streets, when everyone is happy and talks about how much money they make, is when you sell. And when there's blood on the streets and everyone says the market don't work, I lost so much money, that's when you get in. You're basically just a contrarian investor, and you need to be contrarian, because if you're not, you're losing money, because 80 to 90% of the people lose money in the financial markets. Now, the last thing I want to speak about is crypto became, as investing always has been, but especially nowadays with social media, became a ecosystem, or became a space where you need to be aware of future trends and narratives. Okay, trends are a little bit more short-term, narratives are a little bit more long-term, but markets are defined by trends and narratives. Now, a narrative, for example, in which I think is going to take off a lot in the future, and you should be doing your own due diligence, researching and staying on it, which is going to be real world assets. Real world assets going to be the narrative of the future in crypto, where banks together with crypto projects such as Ondo, Chainlink are going to start to use real world assets, physical assets such as cars, private jet, houses, whatever that is an asset, and trying to put it on the blockchain and then sell it on the blockchain, right? And that's something that is going to be a narrative in the future. And you need to look out for cryptocurrencies that cater into this future narrative. As I just said, Ondo and Chainlink. There's videos about Chainlink that I made and Ondo. You can check them out on this channel. I will link them below, and they will explain exactly what real world assets are and how these coins and these projects cater into facilitating this narrative and this trend in the future, and you want to position yourself in that. Now, to finish this off, is information changes situation. So you want to make sure that you have credible sources when it comes to crypto trading and investing. You want to stay informed without drowning in all of the noise, because if you're using 50 websites, 50 different groups, you're just gonna drown in information and you're gonna stagnate. So I would recommend you to have one good source or maximum 2 good sources of traders and investors. You're very lucky watching this video because I actually provide with something like that. So if you're interested in that, just shoot me a message on Instagram and I can let you know, I can help you how you can stay informed without drowning in the noise. Most beginners get wrecked in crypto because they skip the basics and chase the hype. But if you understand why it exists, how it actually works, and how to position yourself safely, you already ahead of 90% of the market and traders. So will you keep believing the lies, or will you learn the system and use it to your advantage? Follow me here, because this is just the start of your journey and I'll be your guide for free through every step. Give me feedback if the video was helpful to you. Don't forget to make your first step into the Web3 world.